Welcome, welcome, welcome. So let's get everyone in the room. We're really excited to join us this evening. It's going to be one of the most special events that I've actually ever been part of, believe it or not. And I've been investing for 28 years, but I don't think I've ever had the privilege of having two amazing opportunities, one in London and one in New York. And so we want to get started. But before we do, just type in the chat box, where are you coming from? You know, it's always fascinating. I'll introduce all the speakers just now. But just type in the chat box for me, where are you coming from? Let's see where this eclectic group is coming from. So we've got Poland straight out of the bat. We've got Cape Town, we've got Canada. Where else have we got? Gordons Bay, South Africa, Windhoek. Where else? Zimbabwe, Centurion, Portugal. So Devern, we promised you we got an eclectic global audience. So we're doing pretty well from east to west in terms of that process. Okay, let's rock and roll and get straight into it because no one's coming here to listen to me today. So I just wanted to share with you that no one is going to be giving you financial advice, but what we are going to be doing is sharing with you about the different investment opportunities. We've got an amazing opportunity to meet the partners and to get to the essence of what is within the opportunity. But at the end of the day, it's your responsibility to do your due diligence and for you to make your own decisions. We do live in crazy times. You know, we've had the Ukraine war, we've had inflation, we've had interest rates, we've had fuel prices going up, we've had the stock market all over the place. In South Africa, we've had load shedding, we've had the Israeli conflict with the attempted assassination of Trump, the Labour winning by record margins in England, the GNU in South Africa, Biden quitting the race, Trump's landslide, more recently his inauguration, tariffs, and for those in South Africa, the land crisis that has taken place in terms of that process. What do you do when you have all this uncertainty? Well, the formula we always work on is diversification. You diversify across countries, currencies, assets, partners, and time. And what I'm super excited about tonight is you've got the opportunity to look at two different countries, two different currencies, two different types of assets, and two different partners with two different timeframes. It literally epitomizes what diversification is all about. We always say that there's four elements to passive income and freedom. The first is the partners. You've got to get access to the right partners. And why I'm so grateful, Glenn, to you and to Selwyn, to you, is that tonight you are sharing opportunities and partners that the average person around the world just can't get access to. So the first thing is you've got to have the right partners. The second is you've got to have access to the opportunities. Again, both opportunities we're going to look at are just not opportunities that the general person can get access to. And so now you've got access. Thirdly, you need the right information. That is exactly what this webinar tonight is all about. How do you get the right information from the right partners? And lastly, you need to diversify and be able to diversify across different countries, currencies, assets, partners, and time. And so if you do all of that, the objective is to get paid. Now, tonight is super exciting. I mean, literally, we're going to start with London, and we're going to literally be looking at an opportunity, a private equity opportunity in London. And then we're going to pivot after that to New York, America. And I must admit, 20 plus years ago, when we started this company, 21 years ago, I never ever expected, I dreamed of the ability to have quality partners that Callio Private Equity have brought to the table and allowed us to participate in two amazing countries, in two amazing cities. You know, the founder of Callio, Garth Wellman, said, when one of the reasons that they partner with us, and just to be clear, a family office is someone that helps the wealthiest of the wealthy, the top 1% of the top 1% with regards to managing their money. The 1% can pay for the advice and get the results. We need to support everyone to get access to the same advice and the same results, which is why this collaboration is so powerful and how it works. And the investment team that sits at Callio Private Equity is run by Glenn, who's here tonight, Selwyn, who's also here tonight, and Garth, who many of you have met before in terms of that process. So without further ado, and I know neither Glenn nor Selwyn like me to kind of talk up their credentials, but you can go and look them up on the Callio Private Equity website. But I mean, Glenn comes as a chartered accountant with over 20 years worth of experience in the banking investment industry, the private equity industry, and Selwyn, a PhD and CFA in terms of with the same experience, and they can talk a little bit to their own experience. But you've got two gentlemen with significant experience in this space, both institutional and private, in this institutional private equity, property and investment space. But without further ado, Glenn, I wanted to hand to you because I'm super grateful for the fact that you firstly came up with the idea, because there's nothing better when one is actually investing to meet the partner that you're investing with. And so it was your idea to say, hey, why don't we get Vern along and come and actually meet? Many of us have invested, including me. So Vern, I'm a shareholder in your company already. And so it's wonderful to meet you. I'm a founder of my own company. And I know that so much of it comes down to what's the big picture? What's the purpose? What's the vision? What's the dream? And most importantly, where's the energy to turn an idea into results? But enough from me, Glenn. Over to you. And please, will you welcome Vern, but also just give us a bit of a context of who you guys are. I think it's always valuable.
Yeah, Scott, thanks for the intro. And yeah, hi everyone, and thanks for taking the time to actually listen in tonight. And if you're in other parts of the world, well, during the day. It's quite interesting because you talk about a UK-based company, and as Vern will tell you, I mean, this company is effectively reaching out way beyond the UK very quickly. So we're obviously excited about the opportunity. I think what I want to do quickly is I don't want to waste too much time on who we are. You can, as Scott said, you can look us up and you can get into the detail. I really want to hear from Vern over here. But I think just to give you some idea, as a private equity business, we've been operating for the best part of over 6 years as Calio. And, we have a certain philosophy about the type of companies we want to invest into. And what we do is we look for the right type of opportunity that we truly believe in, and then obviously we look for the right investors to invest into that opportunity. And what is it that we're looking for? Number one, we intend to go through our own networks, and that's quite important. And normally, the companies that we invest into are actually people we know that introduce that company to us. Sometimes it's an investee that we've invested into. Sometimes it's a client. Sometimes it's Wealth Migrate who say to us, hey guys, we've got someone who knows this, and that's through the network. And I think that's important because it brings some sort of trust element to the relationship in terms of who we're talking to and what it's about. The second one is owner-managed businesses. Owner-managed businesses are important to us because you tend to find that the owners are obviously extremely passionate about their business, but they've also got a lot at stake. So, we tend to believe that there's a lot of alignment. And as Calio, we call ourselves, for lack of a better word, conscious investors. We like to try and find opportunities that actually make a difference. And I think this is where CarryFit comes in. Vern is going to talk about the fact, the history behind this market, and the fact that, a baby carrier isn't just a baby carrier. It can actually make a significant difference to the people who are using it. So, and the babies, obviously. And then ultimately, the core things, finally, that are important: risk and return, risk-adjusted return. Are we getting the correct amount of return for the risk we are taking? And with that, we look at this opportunity. We look for businesses that are actually already operating. We're not going into a business here that's starting up from scratch. We're actually going into a business that's already in the market selling something. So I think that's quite crucial. And the targets that we look for, we talk about an IRR and we talk about times money back. I'm sure Scott might have spoken to you about that and explained that to you, but really we look for in an opportunity like this, an IRR in excess of 25%. We're actually targeting somewhere around about 30%. And that really means, what does that mean? That means that we expect that if we on the right track, we would expect to see about 3 times the original investment back in a period of 5 to 7 years. And I'll get into a bit of that detail towards the end. So let me not waste any more time about what we are about. Vern's been standing here very patiently. I'm going to let him speak for himself a little bit because I can't explain his history certainly as well as he can. So Vern, over to you.
Thanks very much, Glenn, and hello everybody. I have seen a few people in the UK and Europe, so we're probably on similar time zones. And actually, for once, on the rare occasion I'm speaking to people in South Africa, we've got some sun and some warmth in the UK. So normally I'm freezing when I talk to Glenn and Sel. So this makes a nice change. So I am Vern Hill. I'm the founder of CarryFit. I'm going to pop up a really short deck because it will give a little bit of context to where we've been, the journey we've been on, and where we plan to go. And then I believe we've got some time for questions towards the end. So I'm going to whack the deck up now, which should all go super smoothly because we've practiced it diligently. So there we go. Hopefully everybody can see that.
Yeah, we've got it. We've got it. Yeah, it's perfectly clear.
Fantastic. So CarryFit, as Glenn said, we do make a baby carrier, but we are so far beyond just a product business that it's untrue, and that's a big part of what I want to run you through this evening, everybody. So I am standing in an award-winning baby carrier. It's always fascinating, and it is great to see the chat fire up. I'd love to know how many people have worn their babies, how many people are parents, and how many people have encountered some of the problems and challenges that I'm going to explain around this particular product that we have solved and we believe we've solved. So the story behind CarryFit, my background is all pre and post natal fitness, so far from being an accountant or anything like that. My background is sports science, and that means and human movement and human biomechanics. So a degree and a master's degree done in London. So for many years, I worked long before it was trendy and long before Instagram was a thing and you could splash it everywhere and talk about it. I worked as a pre and postnatal fitness trainer in London. Opened one of the first dedicated studios where it was just mums that came. And the background to that is, rather than having the babies crawling all over the gym, which gave me the heebie-jeebies, we as trainers used to wear our clients' babies in carriers. So to say that I have been wearing and using carriers at an extreme level over the past 20 or so years would be an understatement. I know baby carriers. We as a brand know baby carriers unbelievably. So CarryFit actually started life as a live class group exercise content. And if after this you want to go and have a nosy around our social media channels, you will see exactly what I'm talking about. We still teach those classes to this day. We started that part of the business in 2016, and we partnered with a brand called Close Parent. And quickly after that, we were approached by Cybex, who are one of the biggest baby goods brands in the world, to work with them and promote their carrier at the time, which is called the Yema. Now, why is that significant? It's significant because we've always been able to attract eyeballs, and eyeballs and attention are really valuable currency in the modern setting. And what we do gets looked at, particularly on social media. In 2017, we began a 4-year partnership with Ergo Baby. For those that know the baby space, Ergo Baby are the market leader alongside Baby Bjorn. They are one of the biggest baby goods businesses in the world. They are certainly the most respected baby carrier business in the world. For 4 years, we were their well-being partner. And what did that mean? It meant we provided content around baby wearing movement, baby wearing safety in a movement context. At the end of that, 2021, we had got the business into a position where we wanted to create our own baby carrier. We knew a huge amount. We also knew that what was out there in the market wasn't doing a sufficiently good job, we felt, and that we could design something better, leaning into modern sports tech fabric, which I'll tell you all a bit more about shortly, and leaning into our understanding of particularly the postnatal recovery process and postnatal well-being. So we set about doing that. We did it in record time because we knew an awful lot and we knew who to go to. And in 2023, in March, so almost exactly 2 years ago, we launched the CarryFit Carrier, the first iteration of it, and the CarryFit app. And we launched that through John Lewis in the UK. John Lewis are the premium nursery goods retailer in the UK. Now, for those of you that might be thinking, oh, an app and a carrier, that's a slightly random mix. Again, I'll get onto more of it later, but effectively for now, if you can have in your brain Peloton for parents, except in our case, your bike is a baby carrier, you'll get an immediate flavor of what we're trying to set out to achieve and the mission that we're on. And the mission that we're on is really, really important. All of the statistics globally tell us that increasingly new parents want to be active. There's more money being spent on recovery, on health and well-being for new parents. What we know from CarryFit, from 2 independent studies that we've had done, CarryFit significantly improves postnatal depression scores at a clinical level if it's just done for 8 weeks. It improves the parent and child bonding. Now, that is absolutely critical for life outcomes for your children. So we can honestly say that doing CarryFit significantly improves your child's life chances in terms of health, wealth, and emotional stability, and that is absolutely key. And we know that CarryFit accelerates the process of physical recovery for new mums. So we know some really cool impacts of CarryFit, and we want to build out this ecosystem of products and digital support to make sure that all new parents can access movement with their baby. So on to the carrier itself. Now, because I can't see any of you, so I don't know what's gone in the chat because I'm looking solely at the presentation.
Don't stress. I'll manage the chat for you. Okay.
Perfect. If any questions pop up as we go, just fire them in, Scott. That'd be great.
Yep.
So the carrier itself has a couple of key differences from everything else on the market, and it does have some protected IP with it as well. Now, the first major difference is the fabric that we use. So this is fly knit technology like Nike used for their trainers. It's laser cut from a single panel. And what that means is the whole carrier is constantly moving, interacting, and adjusting to the size of the wearer and the size of baby. So it means we get a better fit versus all of our competitors. Most buckle carriers are what we call fixed panel carriers. So they are a fixed set of dimensions. So they will fit some people really well and others not so well. Ours captures a much broader range of optimum fit. Now that's important for the wearer, really great. It's a comfort thing. It's the one bit of baby gear you wear, but it's really important for your baby and for baby safety, because positioning in a carrier is absolutely crucial, particularly in those first 4 months of life. So parents have unbelievable peace of mind in our carrier, and you can see that across all the reviews and the scores and awards. So the fabric is incredibly clever, and nobody's applied this kind of fabric to baby wearing before. The next thing is the mechanism and how it goes on and off. And for those that are in the chat and have worn a carrier, it is that quick and easy. It is wrap up, it is over the head, and it is 2 buckles on the side that are at the front and in view. And I will almost guarantee that there's somebody on this call that thinks, my goodness, why did nobody else think of that before? Because as a parent to 2 small children myself, I couldn't figure out why nobody had thought of it before either. So the mechanism by which it goes on makes it very simple, very intuitive to use. And then it's the back panel, which you can see on the left of this slide. So the thing that the CarryFit carrier does better than any other carrier in the world, and again, we've had this tested, it disperses load and it allows muscles to engage. Now, this is really, really important for a newly postnatal pelvic floor. So it unburdens the downward force through the pelvic floor because it allows more access to the muscles of the posterior chain. Now, all of that sounds really, really clever, and it's designed to keep mums nice and safe. The tagline to all of that is, it makes my baby feel lighter. So you get this unbelievable wearer experience. So it's very, very, very comfortable once on. Now, alongside the carrier unlocks access to the CarryFit app. And it does that for a length of time, and then the app turns into a normal fitness subscription app. So there's a very interesting long tail to what we do, that we can keep people spending money. And this is the call to discuss that. It's an investment call. We can keep people spending money beyond just a one-off product purchase, which is so uncommon in baby goods land. You buy a car seat, you've bought a car seat, you don't buy another one. Normally you buy a carrier, that's it, you bought a carrier. With us, if we look after people well, we will see them stay on and turn their complimentary app access into a paying subscription-based access. Now, I want to talk a little bit about the CarryFit app, because it's quite an incredible achievement, for want of a better word, but it's an incredible support tool for parents. Firstly, it's the world's first ORCA approved postpartum wellbeing and baby wearing app. Now, in ORCA in the UK, they are the governing body for digital health apps that can be prescribed and signposted by the NHS in the UK. So it is of the highest standard in terms of the information contained within it. Think of it as a Michelin star for health apps, and you won't be far away. Now, the app and the way the app journey works is it's personalized throughout to the primary user's personal journey. So generally we see that as mum. CarryFit is a business that fundamentally believes strong, healthy, well cared for mums is the way to change the world. And that's what the app aims to do. So it personalizes their recovery journey from a library of expert content across medical, pediatric care for baby, women's health physio, sleep support, nutrition, ongoing baby wearing and product support. So we get extended use out of the product, and also all of our CarryFit fitness programming. So there's a huge amount within the app. Now, an interesting part of the app that we're really growing at the moment is the antenatal suite in there. So before people need a carrier, they can come and use the app and use it to care for them through their pregnancy. And that's a fantastic early capture tool and a great way to build brand. As I said, we've already got some very cool data around what CarryFit does, the impacts that it has, and we are incredibly proud of that. It is a business that has an overwhelmingly positive impact.
Vern, yeah. Quick one. The numbers hasn't come up. It's kind of got stuck halfway through.
Here we go.
Yeah, thanks.
Better?
Yeah, perfect. Thank you.
So that's kind of the sort of history of CarryFit, a little whistle stop on the product. And I would encourage anybody to go and read some reviews. I really would. Head to our website, see what people say about our carrier, go on to John Lewis, see how it compares to other carriers in the reviews. Those kind of things you can't fake unless you're on Amazon, and then you can buy them, and we're not on Amazon. Now the numbers. So we've powered all of this primarily through organic growth, lots of it driven through social media, and we've achieved 300% year-on-year growth, and we're modeling the same again for 25, 26. And I think it's worth here saying that those numbers are sensibly conservative. They don't include us unlocking the US market within these numbers, which is a massive market, when we are ready to do so. And they don't include, for the tail end of 25 and 26, our next gen product, which is a product for hiking. It's a rucksack carrier that will go from kind of 18 months through to about 4 years old. Depending on which take you take, I may be a terrible founder because I tend to err on the side of caution. So these numbers are sensible and often not what you see from founders when they say we're going to grow like this. But what that means is we think with the right rocket fuel, the right support, and we've got an incredible, very mature, very well-placed team, we can take these numbers absolutely to town. And are excited to have the opportunity to do so. As Glenn mentioned, we're already operating beyond the UK, so we have distribution in place in Australia and New Zealand, in the Middle East, and another number of other markets that will come on in April and May this year, which we are, of course, incredibly excited about. Australia and New Zealand has been a really interesting kind of test case, great adoption. It's a small market, but incredible app activation rates, and again, really well received. We're just about to launch in the Middle East. I heard today we've just been nominated for an award, even though we're not in the market yet. That's the standard of the product that we're launching over there, is that I think we will win an award at our first show out there in May. The product is honestly fantastic. I have seen, touched, felt, fitted pretty much every baby carrier that's been produced in the last 20 years, and ours is phenomenal. And I think to have that kind of confidence in your own product is pretty important. Yeah.
Before you get into these numbers, you can go back to the previous one. Maybe it would be useful for the guys to know, just in terms of your price point of the carrier, particularly around your experience at, for example, John Lewis, because a lot of people might know John Lewis. I think it used to be like Edgar's in South Africa, probably was a good comparative, kind of a higher end retail type of environment. And just your experience in terms of how you put the price point versus other carriers, and obviously the take up there. I think that's quite useful.
Yeah, I've just paused sharing for a minute, so you may all see me briefly again. Yeah, absolutely. So our carrier is in the UK, its RRP is 195. That sits us in between kind of two of the upper end premium carriers from both Ergo Baby and Baby Bjorn. So it's competitively priced. Obviously, no other carrier on the market has the value add of the app and that app ecosystem included with it. And our margins on it are really healthy. Our landed boxed cost per carrier is $31 at the moment, and that can come down further on volume. So there is a great margin in there. UK retail margins, we sell into John Lewis at £105, which is pretty standard. Everybody works within a very fixed kind of category margin. And possibly one of the greatest things that we've seen even in the short time we've launched is, as I'm sure many of you are aware, as the sophisticated investors you are, baby goods is a largely recession proof industry. It's a really protected spend. People tend to want what they want for their babies when their babies arrive, and other things go by the wayside when they really
trust me, any husband or father knows what you're talking about there.
we've all felt that pain.
What terrify us.
Yeah, so it's price pointed at the premium end of the market, but with great justification, and it sits very comfortably there, and that will be replicated across other markets as we go into them. So,
and your John Lewis, when you went in, I think you were telling me just in terms of shelf space or shelf demand versus other products, there was quite a quick ramp up in demand versus some of the others. And it wasn't necessarily because of the price. Actually, the market was sophisticated enough to understand the quality of the product.
Yeah, so we've done a couple of things in that regard. We've been very not fortunate. We've created something great. Awards in parenting land really matter. We've won a few, and we've got a bunch more that we know we've won that we can announce in due course this year, which is great. Parents really shop on review and awards, particularly in the UK. So we rattled through those early on, and they really do kind of earmark the quality of the product. So the big, we were in the Times early on, the Independent, all the roundups of the latest baby gear. It reviewed unbelievably well. Now, of course, these are blind reviews. You never know what somebody's going to say. But the great thing about having the app ecosystem is that people understand this product, even if they are brand new to baby carriers, because the app holds their hand every step of the way. So they feel genuine support. They feel an immediate kind of affinity and loyalty to the brand. They feel like they know the brand because we're in the app looking after them in a digital way. And that's unbelievably powerful for brand loyalty. It also means we're incredibly confident when we offer them something for a much bigger baby down the road, that they will choose to extend their spend with us even further, because they will trust in the quality of it and the team behind it and the ethos behind it. There's a question there from James, which I'm going to address because it's a really good one. So there is a strong second-hand market for carriers throughout the world, actually, and it's great. When somebody resells, and we've seen some resells of our carrier, if they want access to the app, they immediately have to choose to be on a paid subscription. So every single carrier has a one-time use, one subscription only code on it. So what we tend to see when people buy a carrier secondhand is, if they want the app, they're immediately paying either £119 for a year's access or £19 a month. So actually, again, for us in the second-hand market, there is a way for us to access spend that is totally out of reach for every other carrier brand in the world. If one of their products is sold on Vinted or eBay, they get nothing. We get the opportunity to get you back in as a subscriber into the CarryFit ecosystem and spending through the app ecosystem. So again, it's really quite compelling, and people that tend to want our carrier tend to want that support. At the minute, we see a 97% app activation rate. That means 97% of people that buy our carrier new download and set up the app and go through the personalization process to access that support, which we are obviously thrilled about. So yeah, great question. Any other questions before we flip back into the numbers? Because I'm conscious. So great. Thank you, Graham. Well done for keeping me on track. Yes, IP. So we've got some interesting IP on the carrier on the back panel, but the main bit is here on what we call these hip sliders. So the ability to widen the base of our carrier with baby in situ through these little notches hidden in the waistband is completely protected all around the world by IP. And it's really, really nifty, because one of the big talking points for baby carriers is what's called hip dyslapsia. And every carrier nowadays should be certified by the International Hip Dyslapsia Institute, and ours is. To be able to adjust with baby in situ is something that other carriers simply don't do effectively. So that is the primary IP. And there is every opportunity that at some point other brands may want to copy and get in trouble, or ideally license that. It's a really nifty mechanism. The main thing it gives is parenting peace of mind, because you can adjust it instantly if your baby's in. Again, for those of you that have had baby carriers, if you've had an ergo baby, you take them out and you adjust things with Velcro. If you've got a baby Bjorn, you take them out and you fiddle with zips that are in against them, hard parts against your delicate baby's skin. All of this is buried in the waistband, never touches baby, but totally changes the width of the base. So it's a really nifty little bit of IP. And again, it was just our understanding of carriers, our understanding of biomechanics and physiology, and just a better way to do something based on that experience, but also just looking at carriers with a different set of eyes. I am not a product designer. I am interested in angles of limbs, positions, and access to muscle. And that's how we came at a baby carrier. That, combined with Hester, who is our head of product, who is a 20-year baby goods designer and an absolute phenomenon, that those two brains combined mean we come at it, all of our products, with a really, really interesting duality of purposes. By loyalty program, Graham, do you mean a sort of affiliate refer a friend type program? Because we do quite a bit with affiliate, quite a bit with influencer, and we're always looking at that. So if you mean that, yes, and we are growing that as we speak. I'm going to flip back into the numbers just because I'm conscious of time, so I'll reshare that other screen and jump back in. Graham, it's machine washable. You just clip it up, roll it up, and stick it in the washing machine. Most baby carriers are. So I never met you, Graham, but you're pulling some really good points out of my head. So this is machine washable, but it also goes through a much more vigorous testing suite than every other carrier on the market. So we have a 90-point quality control document. We have the smallest tolerances. That means discrepancies in lengths of parts, positioning of parts versus any other carrier brand on the planet that we're aware of. And we have 100% inspection rate off the factory line. Every carrier gets inspected. You are going to put your most precious thing you'll ever have in this. We take our time to really make sure it's spot on. This carrier is made of 30 post-consumer plastic bottles, so it's also certified as 97% recycled. So it's good for your body, it's good for your baby, and it's good for the planet, or as good as it can be. Jenny, what does the app do? The app personalizes somebody's journey through postnatal recovery. So in the first 8 weeks after your baby arrives, you get on-demand library support from our GP around your recovery, and that's based on how baby was born, whether there was any complications, whether you had a cesarean birth, a vaginal birth. All of that's personalized. We believe firmly that knowledge is power, and one of the biggest problems at the moment in the world is postnatal anxiety. It is really crushing mums, and we can alleviate a lot of that by getting the right information to them at the right moment in time, so they're not worried and they're not anxious. And that, in a nutshell, is what the app does. So the first 8 weeks is heavy on medical support, pediatric support for your baby. So all of those questions that new parents ask, Why does a poo look like that? Should my baby be doing this, that, the other? All of that's in there with our pediatric consultant. Then it's women's health physio, a lot of work around core and pelvic floor recovery, a lot of work around diastasis recti, real hot topic in postnatal well-being. That's the tummy gap for those who are thinking, what is he suddenly talking Latin? So it does an incredible job. After 8 weeks, it opens up to fitness programming, more movement. We know how good movement is for recovery. We also know that connected movement, moving wearing your baby, turbocharges the outcome. It also turbocharges what's going on in your baby's brain. So moving through human movement planes for your baby's brain is incredible for their vestibular system. It unlocks their mathematical mind. So it is, yeah, absolutely unbelievable. From 16 weeks plus, the handbrakes come off a little bit, lots more fitness programming. You can choose goal-based programs, whether you want to get back to running, get back to lifting weights in the gym. It's all there, and the app is growing all the time in terms of not just content, but also sophistication and personalization. So very soon this year, we'll have community recommendations, we'll have mood impact scores. So if there's a particular workout that on a day for somebody with a 9-week-old baby makes them just consistently feel amazing, like they can take on the world, the app will start to recommend that to everybody as they get to that moment in time with their baby. Sophie, great question. So hopefully that covers off the app, but have a look at the app, go onto our website. It's all there, and it's really worth having a look. The carrier's phenomenal with bigger babies. Now, the reason this fabric's so amazing, Sophie Louise, is when I tip, baby goes nowhere, because this carrier is constantly adapting and changing size and shape. This panel length can actually change size and shape by 8 inches. It simply stretches. So as your baby grows, this carrier literally grows with them. So it's always providing them optimum size and shape based support. And that is absolutely key, because that's unheard of in baby wearing land. There isn't another carrier that performs like that, because this is performance wear does baby wearing. So it's amazing. So yeah, the tip point, and we call it the tip test. Every baby should have a visible ear. Every baby should have a visible face and a nice kissable head. We call it high, tight, visible and kissable in baby wearing land. I can see Glenn writing that down. He's going to nick that one. But mainly when we tip, our baby shouldn't go anywhere, and it does that at all ages and stages. Does the app flag when a woman? Yes. So really interesting question. And we have a clinical psychologist in our app called Dr. Lucy Gore, and she does a whole series on kind of red flags, a whole video series. So when things get too much or get on top of you, every video is caveated with a, if you're at this point, we are no longer the place for you to find support. Go and seek in-person support, tell them this, and they will look after you. So yeah, absolutely. It doesn't do telehealth, so it won't book you an appointment, but it does have a red flag series. We have the same in the physio series as well. So if something's amiss with your recovery based on what we'd expect from a normal recovery timeline, our women's health physio will flag that to you, or it'll become apparent to you when you're working through one of the video tutorials, for instance, scar massage tutorials. And then people will know. So again, we really try, the whole idea with the app, particularly the medical and physio support, is we're trying to arm you with the knowledge of what a recovery pathway should look like and feel like. And things that sit outside of that, we're going to make sure you know and understand them and what you should do about them. So the most common one is we find people going to see their women's health physio in person. It's not a pathway that exists in the UK. You have to have that appointment on referral or do it privately. In other countries, it's part of national health. But yeah.
Ben, can I make a suggestion? Let's finish off the presentation and we can come back to the questions, because otherwise we will, one question will lead to another, will lead to another. And I think it's important that we let you go through the presentation and finish off the financial component of the business, and then we can come back to the product questions as well.
Fab. As you've probably gathered, I can talk quite.
I love the passion, and I just
quite readily about CarryFit. And they're great questions. They're brilliant. Love them. Right, let me go back to that other tab and share again. So we were there.
Yeah. So I'll talk to this one.
Yeah,
Vern.
you go for it, Glenn. Yeah.
Yeah. So I think what's important, and Vern's touched on it, is obviously, first of all, the demand for the product, the potential growth in the market. I think the size of the baby carrier market, somewhere around about 2.3 billion. I think that's very important to understand. So when we look at an opportunity, we're not trying to dominate the market. We don't need to dominate it. We need to just get a slice of it. And I think the beauty of baby goods, as we all know, is, people would rather leave food off their table than buy baby goods or anything for a baby. So there's a constant demand for it. And if the product is good quality, Vern's been talking about it, then certainly the demand should be there, and the demand is there. And I think that's important, because why are we looking for investment? We're looking for investment specifically because this business needs working capital. It basically needs money to come in and effectively meet that demand. In other words, more baby carriers to meet the demand globally. And that's how we've projected the growth. I think what's important about the slide, and we can always go after this, I don't want to get too hung up here, but after this we can always send out, we've got additional detail on the numbers and a more detail on the entire opportunity. But what's important here is the actual margin on the business. The gross profit margins are extremely healthy, around about 60%, more than 60%. And the other one is we have what we call EBITDA positive. So from our perspective, this business is ramping up. We call it a hockey stick. You're initially going slightly down like a hockey stick because you're spending a lot of money on your working capital, getting the business rolling, and effectively, as your sales pick up, you exceed that fixed cost in the business. And as you do that, then every single sale is effectively an incremental increase in profitability to the business. And that's really what that EBITDA shows. So we always look at an investment, normally 5 to 7 year period. That doesn't mean we won't exit an opportunity sooner if we see an opportunity to do so. But certainly from our perspective, we look at that growth profile and demand over 5 to 7 years. One thing I can just quickly touch on is what is the exit? And Vern certainly knows about this. There are industry players that would potentially look at something like this. Funny enough, I think you mentioned to us a while back, like Thule. Thule's a very interesting example. The other day, they used to do roof racks. Now they're doing the running
buggies, yeah,
buggies as well. So that's a prime example, or another private equity player that's looking, for a business that's grown and wants to actually get involved. So that's really the story behind the numbers, and these numbers effectively back out into what type of return we would expect to get off our investment or off your investment in terms of an exit. So that's the numbers. The rollout, Vern, you can touch on that, because I think you mentioned it very quickly just in terms of what you're doing on the back side.
Yeah.
I think, and funny enough, there was also a question there about color, which I also found interesting.
Yeah.
But maybe you can just touch, go through this one quick, and then I'll touch on the summary of the opportunity.
Yes, great. Yes, so I mean, this year is all about raising the brand profile. We've got so many proof points now that the product is great. This is a slight upgrade to the carrier that I'm wearing, and that you can see there on the slide. We've got new self-locating buckles. They just pop in and out. You don't even need to look at them, which is great. We've got a bunch of new app features coming, as I alluded to. We've got a new back carrier that will be a great follow-on product, but also a phenomenal standalone product for anybody that we've not captured first time round. It will be the best in class hiking back carrier. Some of you may be familiar with the big sort of clunky steel framed back carriers. This is nothing like that. It's a phenomenal bit of kit. We've got a major brand ambassador in the UK to announce that will be a real game changer in our domestic market, but also she is known internationally. She's a product fan. She's used the product with her last baby, and and that will be fantastic. So lots of elevation around brand awareness. Really, we want to own this conversation around moving with your baby, be that's walking, hiking, dancing, whether that's just hoovering the floor. Our carrier is going to support your body and your baby better, and then it's rolling out through new territories as we can. So yes, lots going on. All of that's modeled out, as Glenn says, and it is a great team. I've been incredibly fortunate with the team I've been able to put in around me, really senior people from other organizations that have joined CarryFit, spotted the opportunity themselves, and are equally passionate about the mission that we're on. So I'll let Glenn come back in for this one.
You're muted, Glenn. Glenn, you're muted.
That helps. Thanks, Scott. Yeah, so this slide we normally show through to our Calio investors. We've included it here, but I think because you'll see certain things like a minimum investment commitment of around about £100,000. Obviously, if you're coming through the Wealth Migrate channels, then that's not the case. So that's quite important to understand. So normally, to Scott's point that he made right at the beginning, we tend to focus on very specific high net worth individuals in terms of the opportunities that we source. And what is it that we putting in front of you? It's effectively an equity investment. We call it equity and debt. As Vern will know, it's structured effectively in the business as a loan. And it does generate a return, an annual return after a year. You should start seeing around about 5% on your investment just rolling effectively. I think it's important. That's a preferred return. So that's paid out as the profitability comes. So there is an ability to sit and say, hang on a sec, what's the most important part for this? What's important for this business? If it's the growth, then do we necessarily need to hold back or accrue that dividend? It still accrues, it still comes to you, but maybe it's not necessarily paid out at a certain point in time. So that's really it. You're getting an investment into the business that's structured as a loan that generates an annuity return for you, which I think is quite important, 5%, and it's got equity attached to it. So when we look for an exit down the line, obviously it's the equity really that generates that capital return for you.
Glenn, can I steal the screen just quickly from you? I just want to show people how they can participate. So let me just show you here quickly. So there's two things that I want to show. Firstly, for those people that are part of our mastermind, they know that I talk a lot about the major trends around the world, the 8 technology trends plus the 8 societal trends. One of the major trends is O2O, which is online to offline. And what you've got here at CarryFit, Vern, is amazing because you've got the offline, which is the baby carrier, but you've also got the online with the app and how the two work together and how the businesses of the future are where it's an integration between the two. So I just wanted to show everyone that. If you literally go to the Wealth Migrate platform and you take what you've just heard and everything that Glenn has just shared, and you literally log in, you can come down here and you can see the CarryFit deal and you can read all about it. You can download the documentation. You got absolutely everything. You can go read about the sponsor, the due diligence. You can even go watch the video. This video will be put up there. But if you want to go and invest in this deal, you can literally get started from $10. You can digitally sign the agreement. You can download the agreement. You can go, I agree. You go make investment. And you've just seen me literally invest into the CarryFit deal in under 10 seconds. And so I just wanted to kind of share that for people, that now the ability to get access to opportunities like this is just amazing. And for me, what's so important here, Vern, and also to you, Glenn, is that the amount of due diligence you've done. A lot of people ask about due diligence, and what Glenn and Selwyn always sort of underplay, and no disrespect, but you don't like to go on and on about it. But you flew over to England, you went to the stores, you went to the competitors, you bought the different types of products, you analyzed the market. There's been a significant amount of due diligence here, along with the fact that Vern also came through a relationship. So it wasn't a LinkedIn interview or, please help, I need money. It was actually, through relationships, which I think are really, really important to the principle I try to bring right up front, which is the first and foremost thing as to whether you're going to be successful or not is on the quality of your partners. So can we just go to a couple of questions here then? So Graham said the product's liability cover
is robust.
Okay.
Yeah, I mean, we have 3 different covers in place as a business, actually. So we have a cover that covers the app, and that kind of digital health prescribing, which is increasingly commonplace, and they're fairly standard covers now for health-based apps. It's very easy to get robust cover now. If you think of the huge, think of Peloton and somebody falling off their bike, not a complex thing anymore in the modern world. We have all of our product liability insurance. We are compliant to all 3 of the major sets of safety standards for baby carriers as well. So we've actually slightly overdone our safety requirement, even though we're not in some of the markets that would require the specific ones that we've done yet. We've done them anyway. It's a great thing to point to. We have supply chain creds from our factory. Because John Lewis are an absolute nightmare to get listed in, so we had to jump through a lot of hoops for them. And we actually have a separate cover as well for our ability to still teach the live classes and teach events and host roomfuls of mums looking like CarryFit ninjas, squatting and lunging in amazing products and feeling fantastic about it. So yes, insurance is something that's actually got and liability cover has got a lot simpler in the years that CarryFit's existed. I remember the first time I went to an insurer and said I'd like to stick a load of mums in a room lifting weights and squatting and lunging whilst wearing their babies. It was more than a raised eyebrow, but not nearly so complicated now. So yes, robust.
Before we keep going, I wanted to bring Chaz in. Now, Chaz, you and I sat with Glenn in, I think, August last year when we went away for the Wealth Weekend, and Glenn came and told us all about the CarryFit opportunity, etc. You went on an interesting journey yourself, and I'd love you just to share your experience of not only being an investor, but more importantly, actually testing the product yourself. So I'd love you to share your experience and also where you're from. So you're not based out of London. This is Swaziland, South Africa.
Yeah, hi everyone. Yeah, I heard about this through the Calio team sometime last year. I can't remember the month. And we went through the same presentation, and I was blown away by the business. I'm also a small business owner, also into recycled products and all that, so that everything sort of resonated with me so well. I also then soon after that heard that I was to be a grandfather for the first time. So my son and his wife were just newly falling pregnant. So I decided I'm going to invest in the company for one, but I decided I'm going to buy the product as well. So I'm based in Eswatini. My son's based in Cape Town. I went online. I bought the product, and it arrived in their on their front door about, I think it was 3.5 or 4 days later. Now, obviously, they didn't have a use for it at that stage because they were brand new to be mum and dad, and they eventually gave birth to a beautiful little boy in February. They haven't quite used the app yet because they thought it was a bit too early, but I've got the feedback I've got from them has been fantastic. And actually, they went to a baby shower this last weekend, and everybody was commenting on the CarryFit. They all said the stretchiness was amazing. All the other carriers that they've all got hurt them, and they really battled to move around. It was just too stiff. They all wanted to know where they could buy it in South Africa. And then they're actually online right now as well, listening to your presentation. So Ariel was sending me, Noah seems to like it too. Immediately calm, and I can do everything while he's in it. All the housework, walking, shopping, everything. And then she just mentioned now the hiking one is going to be amazing. We were talking about hiking carriers just this past weekend. So there's from the horse's mouth. I personally haven't worn it myself, but they love it and they think it's absolutely amazing. So great product. Well done.
Awesome. Well, Chaz, thanks so much for coming. I really appreciate it. And I just thought it was so funny when you shared with all our mastermind, like not only had you invested, then you bought one, then it was delivered. I thought, well, we might as well come and hear it from the horse's mouth. So I really appreciate your time. So thank you very much. Glenn, I know you've got a duck. And, in terms of, is there any final comments or thoughts from your side, basically?
No, I mean, Vern has said it all. I mean, obviously, I think my final comment is, as a business, we are very careful around which investments we go into. To give you context, we've only invested probably 2 investments a year, of which this is one. Sol is going to be talking to another one after this. So, for us, we're extremely passionate about it. I think the last thing I'd say is we've already put some money in, and we basically have tranched it up. So really why, we're talking to you now, because we focused on the second tranche of investment into the business. And really that's where we are at the moment. So we're obviously extremely excited about it.
Yeah,
And
awesome.
that's really it.
Awesome, Glenn. Well, look, I really appreciate you being here, and equally appreciate the opportunity for people like me and Chaz and everyone else to be able to invest with you, Vern. So yeah, it's really quite exciting in terms of the opportunity. But yeah, no, Glenn, have a lovely evening. I think I'll ask Vern the last 2 questions, and then we'll bounce to Selwyn.
Cheers, everyone.
Cheers. So Vern, there was a question here from Rashay, said, what other debt do they have? I assume you have.
None. We don't have any other debt in the business. We've been angel backed from the start. So there's no other debt sat within the business.
Okay,
That's
excellent.
a simple one to answer.
Excellent. Okay, well, I think if anyone's got any final questions, otherwise we're going to pivot. I just want to remind people that, as I said to you, in terms of the platform, it literally is as easy as you go to the marketplace. You can see the carry fit here. You can literally click on the link. You can go and read all about it. You can see the returns. You literally, everything's here. You can download the documents. If you go here, you've literally got access to the full investment, everything that you just saw tonight that Glenn took you through. It's all here, so that you've got access to everything to be able to make the right decisions in terms of your investment. And then, if you do like it, you can literally go to invest, and you've literally seen me. I've just invested in that opportunity. So I think from my perspective, what I'd like to finish off with, Vern, is that as a fellow founder, it's one of those things where you're super passionate about it. And my question would be, where do you kind of see yourself kind of 10, 20 years from now? For those of us, we're getting involved in you've been building this now for 20 plus years, said, in terms of your experience. But, when we invest in your business and we come on a journey with you, it's a partnership. And where do you see the big picture? Where do you see yourself? Where do you want to go?
So the big ambition for CarryFit has never wavered from the very first class that I taught myself in 2016. And the big ambition for CarryFit is that every single parent in the world knows CarryFit, the products and the workouts are an option and a way to parent. And we want to become synonymous with a healthier way, a more engaged way of parenting and navigating those early years. So that's where I see the brand in 20 years is a brand that's known, and it's known for movement, known for support, and it's known for helping parents navigate what is a really incredible, emotional, exhausting, challenging time, and doing it with great products and great support built around those products. So that's where I see it.
Awesome. Well, Marion says she loved it. Chaz says, when will it be available in South Africa? So I think most people from all the different countries are like, well, they're saying that. I mean, Chaz bought it online and it was delivered 4 days later. So you clearly do international shipping as it is. And I just wanted to say on behalf of us and our entire community, thank you for giving us the opportunity. I'm one of your shareholders, and I really look forward to going on this journey with you. I hope I don't ever need to buy one of your products for myself, but no, I'm joking. But I'd much rather just be a shareholder in the journey, basically.
Thank you, Scott. It's been amazing, and thanks for all the great questions, everybody. It's lovely to have questions when you do one of these things and you don't know anybody. It's also nice when you hopefully have good, sensible, well thought out, historically provable answers for all those questions. So yeah, thank you for everybody that got involved in the chat as well. It's really appreciated.
Awesome. Okay, well, look, so we just had an opportunity to look at London. So private equity opportunity in London. Now it's time to get on a Concorde, if there's such a thing, and fly across to New York. And before we go to New York, I wanted to introduce Selwyn. So Selwyn is Glenn's partner, and they work obviously together, but they also specialize in different deals. And so Selwyn is going to be talking to us about the opportunity that we've got in New York, Manhattan, New York. And so Selwyn, without further ado, I wanted to hand over to you. I'd love it if we could just follow the similar sort of pattern from this perspective where Let me just make you the spotlight there. And yeah, if you could just explain a little bit about who you are and your background, and again, who's the partner in New York, and then we can get into the opportunity.
Yes, thanks, Scott. And it's always good to speak to you and to all your investors. Yes, this opportunity has actually been around 2023, and I know that some of your investors have put capital into it. Migrate, the development in on the Lower East Side of Manhattan, is a church conversion, which will be a residential and commercial development of how special the opportunity is, and also how the economics can be made to work, and why we have such attractive economics for this particular opportunity. So let me take you through a little bit of the history. Scott loves talk of the partners and the choice of partners. One of the sponsors has actually been a close friend of mine for over 20 years. And he started to invest. He moved to the United States from South Africa. His wife's family are American, and he started to invest in property. He's a successful investor in his own right, and he's always gone out to. And so this is sourced through my personal network, and this is not the first development that he's done with this particular team. I think it's something like the sixth or eighth development. Certainly, I've been involved in monitoring these developments. This is the fifth one that I've actually been invested in my personal capacity. And there's specialist expertise that's required in order to navigate through the planning required version, and for getting historical tax credits, which make a big difference to the economics. Scott, I'm going to ask if you have a presentation, or whether I should share.
No,
I have sharing rights.
I prefer if you can share. You just share. You just click on the button share. It's always easier coming from your side, because then you can control what you want to share.
Yes, got it. Very nice. Let me go on to this. Let's see. I don't know if it is sharing yet.
Not yet.
Okay. Is it sharing now? Yes.
It's coming up.
Yeah, excellent. Okay, so I think, can you see that, Scott?
Yeah, we got it. Yep.
Okay, good. So I'm not going to go through all this heavy text, but the company that is doing this development, Rivington Company, as I said, very experienced, several redevelopments, similar concepts of value adding. And one of the things that we look for, as in Calio Private Equity, what we look for in property, just exposure to the property sector in a general sense, then the listed market is available to you. You could invest in REITs, specialist REITs that are looking at storage, for example, student housing, as specialized as that kind of thing. Obviously, retail, office, industrial properties. This opportunity is a value-adding opportunity, and that again explains part of the economics that we're going to show you. The property itself is located in the Two Bridges neighborhood in Lower East Side Manhattan. So the two bridges that are relevant here are Brooklyn Bridge and Manhattan Bridge. So it's if you think of the way Manhattan looks, Wall Street is on the west side. This property's kind of on the east side of that part of Manhattan. It is a rare property.
Sorry, can I steal the screen quickly, because I've got a map, and let's just show people so they can visually see what we're talking about. So let me just steal the screen off you. So if you go here, you can basically see that. I mean, here's the New York Stock Exchange right here. There's the property there, and then these bridges you were talking about on the east side and the west side are these two here, I assume, or is it this one here?
Yes. No, it's those two bridges. That's one of the main bridges, and then there's a bridge a little bit further along.
Yeah,
so you'll be able to see
there, and then this one here is not. That's not a bridge. What is that?
No. It's I can't really show it, but there's a one shown in yellow and one shown in white, and it's between
Yeah.
those two.
Yeah. So here's the location of the building here.
So you'll see right there. So it's that area.
Yeah. Sorry, I just thought I'd visually show people where
Yeah.
it was.
So it's a highly strategic location.
Your internet's a little bit slow. I don't know
Yeah,
if there's anything you can do
is
about
in
it.
one of the highest demand residential areas in the world.
Sorry,
Sorry, Scott.
Your internet's a little bit slow. I don't know if there's anything you can do about it. It's a little bit spotty, but if not, we'll just keep going.
I will try and do something about it. Let me. I think if I'll switch.
No, it's just coming. Someone just said it's coming through a little bit.
Okay, I'm gonna switch. I'm gonna switch my network. Apologies if there is an issue here. Sorry, we've had major from Johannesburg had huge storm on.
No worries. Well, if we lose you, I can just talk a little bit about.
Okay, so let me. I'm just trying to find it and share again. I hope you can see that on screen. Just a few important considerations. One is timing. By entering the investment now, you've actually gone through the initial phase. And I mentioned that some people invested, some people brought in by you, Scott, have been invested since late 2023. The funding that was used, the funding that was raised, has been used to do a lot of the pre-construction work. So there's the land has obviously been acquired. It was acquired even before then. It's gone through the design work. It's gone through the work required to secure historical tax credits. It's gone through a certain amount of pre-leasing. We're already close to leasing all of the commercial space to one tenant. And there's obviously been refinement of the feasibility for the project. So you're coming into something that's relatively well developed and de-risked. That's just something to be aware of. And there is a substantial upside. You are coming in at cost by coming in now. Um, let me show you some. So it's already a very beautiful building. Um, St. Joseph Church, you're on the front page. There's a beautiful building that has to be preserved in order to get historical tax credits. One of the advantages of this particular building was because it had been a new church building with a convent in it as well, it didn't require a lot of rezoning or that kind of work because it already had been that somebody raised with me. One of the great risks in New York, and one of the reasons why there's very limited development in New York is the rezoning process is very complicated and intricate and potentially slow. So that's something that's been an advantage. And again, it's a fact of the partners that we are working with. They've done this before. They know how to identify these kinds of opportunities, access to design teams that can help them operate within the requirements of the regulations, state regulations, and so on, and then maximize things like historical tax credit benefits. The opportunity itself is also interestingly structured. There are two routes for capital to come in. One of those is equity, and one of those is debt. I know Wealth Migrate is offering a blended option as well. I think the blended option is extremely attractive. So the equity base that's being pursued is $5 million, and the debt raise in a big chunk of that debt raise has already been taken up. So there's limited capacity. So even as I talk, I'm hoping that there will be enough space for all investors want to come in and who are watching us now. So that's just something to keep in mind. The equity side is extremely attractive as a property investment. Before fees and so on, and these are after the internal fees. It's we're putting the model at 22.5% annum property investment,
I just want to repeat that because
and
people didn't hear.
5 times money back. It's
Sorry,
quite
Solomon.
remarkable. That is for a 7 to 8 year hold. But so there should be accretion and so on, but that is still a very high return.
I want to Selwyn, we're losing you. And I just wanted to kind of show people the return that Selwyn was referring to. So again, if you go to the platform, you can see here that we've got a debt option. And so it's purely debt. It's a 4-year investment, and you're getting a return, a cash-on-cash return of 10.35%. You've got the equity option, which is a 7-year investment, and the total return that, as we lost you, Selwyn, you were saying it's a 22.9% IRR. And then finally, we've got the blend, which is a mixture between the IRR. So you've got a mixture of the capital growth plus the income. Sorry, Selwyn, I was just, when we lost you there, I was just showing them the numbers that you were trying to show.
Yeah, apologies. I've now, this will work. And again, I'm doing it on Johannesburg weather. We've had these thunderstorms and things quite severely by it. So, if we can go back to.
Yeah, you just need to share again. Sorry, I just stole the screen off you. Yeah, and the return on equity was 22.5%. Sure, this storm is frustrating in Johannesburg. Okay.
Scott, can you hear me?
Yeah, I've got you now.
Apologies.
Yeah, no, I've got you now.
Let's hope that we can stick with it. And yeah, apologies. So the one of the reasons why this kind of return can be achieved, besides for the basic economics of is the historical tax credits are effectively the state, the giving you kind of free equity. And it's quite a remarkable thing. Out of the $56 million required to complete this development, $11 million have been provided by historical tax credits, roughly $11 million. So that gives you some indication of the benefit of historical tax credits. Then another positive for the economics here is the actual incoming purchase price of the land was far cheaper than would be possible now. When they bought the land, they paid approximately 30% of what they believe the land would be worth now. And part of it is the land was previously owned by the Catholic Church in New York State. They're divesting from many of their assets. And they actually, I don't think we're thinking particularly commercial. Because you've got to do this kind of work.
Owen, can I make a suggestion? Why don't we switch?
So there was a good land deal done as well.
Owen, can I make a
so
suggestion?
that's something to keep in mind, and that's something which justifies these kinds of numbers, which are not
So, and I suggest we
in income play a property transaction. So that's something to really admire in terms of the deal they've done.
So, can I make a suggestion? I don't know if you can hear me. Why don't we try to switch your camera off? We're literally hearing like chunks of words that the sentences don't make sense because they're breaking in and out. Maybe just try to switch your camera off and we just talk.
Yeah, that's fine. I don't think people need to see my face anyway. Yes, apologies.
Cool. Did you mind just repeating the last minute or two? I don't know about anyone else, but I'm very battled to
Um, Better now, is that clearer?
Yep, let's give it a go.
Scott, can you hear me?
Yes.
Scott? Saying um, there are very strong structural features to this deal, which are extremely helpful, uh, including the incoming um, the land price and the historical tax credits, and those justify the returns that have been modeled without making very dramatic assumptions about the rental growth or exit market. So we think it's been quite conservatively modeled, and uh, yeah, and we think in many ways it's an attractive opportunity without um, making too much of a bet on the property market. Um, Scott, can you hear me and can you see my screen share?
Yeah, we're seeing the screen and we can hear you. Yes. We're seeing investment opportunity, investment options. Okay. I'm going to have to try and improvise here a little bit because clearly this is not working in terms of the internet. So let's just take a look here basically, and let's go to the debt option. So if I go to here, you can basically go into the opportunity. You can see the pictures, so the location we just spoke about. You can see the building. You can see the internal pictures, and one can go through and you can see that it's a 4-year investment and you're getting 10.35% in terms of the cash on cash. It's a value add opportunity, and you can basically go here and download the brochure. So you click on the brochure and you open it up and you can go read all about it. So everything that Selwyn is actually showing us here is actually here. So you can go and read about it in terms of this process. You can look at the pictures in terms of the property conversion, the existing spaces and what they're turning it into. And then you can basically go into the investment opportunity, the targeted return. You've got the deal highlights. So what is happening in New York in terms of the multifamily dynamics. And then you've also got the deal specific highlights. And particularly what he was trying to tell us was you've got the distinctive and attractive location, you've got the value uplift, you've got the tax incentives, and you've got the experienced developer. So these are really important because these are the pros and cons and specific things that as an investor, we need to look at. Then you've got the economics of the investment. So if you want to go into the assumptions, how it's going to work, how it's working over the period, you can see right through to the year 2033. You got the economics. So this is the economics once the development is actually complete and actually owning of the both residential and commercial properties. And then you go into the economics of the development. And actually, this is the building period of the development. You can see the exit assumptions, et cetera, in terms of what they're looking at. In terms of the risk management, this is also important. So you've got historic preservation, the construction scope and risk, financing, market conditions, residential leases, retail leases, and operations. And then probably the most important thing that I've said all night.
Scott,
Oh, yep, sorry, Selwyn.
Scott, I don't know if you can hear me now. Yeah, thanks so much for picking up the ball here. If you could go back just to the previous page, I think there's just one thing I would want to highlight.
Yep.
Just hoping my internet holds long enough for me to do it.
No worries.
Yeah, on the risk management, one of the things that is worth noticing is on market conditions. So historically, we've seen a reasonable growth, and we're not expecting outrageous growth in rental levels for residential properties in Manhattan. So things like 4.5, that kind of level. Over here, there's just to give you some sense of the margin of comfort. This product rentals could drop by almost 20%. and the project would still be break even, just to give you a sense. And when I say break even, that assumes still that people who are in the interest bearing loan are getting their interest, for example. That
Okay.
gives you some indication of the kind of robustness over here.
No, no, that's extremely important. And as I was saying, I mean, you've sort of spoken a little bit to the partner, but I mean, one of the most important things here is the caliber of the partner, Selwyn.
Yes. So Travis Stabler, who is the principal at Rivington Company, he's done many of these kinds of developments, both commercial and residential developments in Greater New York. And one of the great things about a city like New York, and Scott, I think it's a great idea of yours to have a sort of London, New York mix as great commercial cities. You can be a great property developer doing nothing but work in one or two boroughs in New York City, just given the size and scale of that city and just the strength of that market. So Travis is very focused on these kinds of properties. These are not huge developments. He's not building a new World Trade Center or anything like that. He's looking at these kinds of properties and doing one after the other, conversions using historical buildings, and then doing these kinds of conversions and development projects. And then the person who's more focused, he is partners with Alejandra Khan and Alvaro Rincon. Alejandra is actually Alvaro Rincon's daughter. They're a family that have invested in properties in United States. They're originally from Colombia. They're big investors and property operators. Duncan, he's the person I've known and that I was referring to earlier. He has a background in private equity and in consulting and banking, and he's been investing his own money, and he's very strong on diligence, putting the structures up. This is also a very well structured deal in terms of tax efficiency. That's something you've got to be careful in US property investing, having the right investment structures, um, trying to trying to avoid pitfalls like withholding taxes on interest components and so on. So this is a well structured and very heavily diligenced opportunity.
Tommy, while I was going over this, because you had some wonderful input that you said there about, rents could go down 20%. Is there anything else that you would like to on any of these other slides? Because I sort of I wasn't sure that you were there, but is there anything you want me to stop on that you want to kind of just highlight it a bit closer?
Yeah, I'm sure you did a great job, Scott. Sorry, and just apologies again. But yes, I don't think these are extreme exit assumptions, and I think the point of these tables that are shown here, and that I think your investors will have access to on your website, is to show the range of potential outcomes. So we don't have to make massive assumptions about this being a reasonable investment over time. Um, so it's not that we're expecting sub four capitalization rates, which would be possible, but historically unlikely, or that we expect massive increases in historical rents for us to reach the feasibilities that are being projected here. So yes, I think that's the only thing that I would emphasize, which is pretty much what I've been saying all along. Um,
And you went through this, but it's just nice
yes,
to see it.
yes. Yeah, so one of the astonishing things here, and I would actually want to stop here on the multifamily dynamics, New York City multifamily dynamics. So, and we all have an image of New York in our minds, and for those of us who've been to New York, the idea, and particularly Manhattan, the idea of big buildings, people living in small apartments, it is to a large extent true. The lifestyle of people who live in this building, once the conversion has been done, will be a little bit different because it's a smaller building with only 42 or so residential units. But there is a great dynamic in New York around people wanting to live there, certainly early in their careers and so on. Um, there is continuous population pressure and there's continuous housing demand. That demand is not being met by what's currently in the supply pipeline. The housing, one of the reasons why rentals are so high is genuinely supply and demand. This is not artificial. there's simply too little housing being built for the population requirements of the city of New York. And that's what keeps vacancy rates at 1.4%. That's below normal friction of people just moving in and out of apartments. It seems to me that's a very, very low vacancy rate. So the supply-demand dynamics um, uh, are very, very strong in this particular market.
Yeah. Okay, brilliant. In terms of that process, so I think, look, we've kind of been through it. I just re-showed people the pictures, and I also showed them where to go and get the diagram in terms of that. I think if you go back here, you can go through, you can take a look at the opportunity, you can see it's a value add, and say, for example, you say, right, I like this deal. You can literally go invest from $10. You can go digitally sign the agreement. You can download the documents, and you can literally go, I agree, make investment. And what you would see now, if you go to view portfolio, is tonight you've literally seen me invest in London and New York. Now I've gone into the debt option. Some people might say, well, I'm only interested in the debt option because I can earn an income straight away. Or maybe they're interested in the equity option where there's a nice growth. Just to be clear on the cash on cash, that will only start paying in 2027. So it's just important to understand that. So only once the building is finished and stabilized will it pay an income. And then finally, you've got the blend, which is where it's 50% debt, 50% equity. So you've got a slightly lower capital growth, and then you've got the blend in terms of the income component of the two. But again, you can go and read about each one of these, and we've basically given people the opportunity to be able to participate. So I'm not sure, Solon, from your perspective, if there's anything else. I'll stop sharing quickly. If there's anything else that you wanted to go through. Sorry, I wasn't. I know that everyone's feeling, or you feeling a little bit discombobulated with the storm. Someone else said here that most of Pretoria is out with the storm. So it's not you telling fibs.
It's not unique.
In terms of that process.
Yeah. So I do want to address some of the questions that have come up in the chat, and there's one question here which is about the deal structure. Is this phase 2 of the New York City deal? It is. This is the same property that some people would have invested in 2023. It's going into the next phase. Construction is due to start at mid-year, and so this is the funding for that next phase, which will take us to the ultimate commercial operation of the building. So the original offer, which was for that initial funding, which was post-land acquisition, the design, development, and so on, that was fully closed in the last couple of months. The sponsors have reopened to fund the actual construction.
So
climate risk.
Effectively phase 2.
Yes, so this is effectively phase 2, and this will be the construction and the construction and full development of the property. There's a question about climate risk and flooding from the river and sea. There is in fact work that New York City is doing. When Scott showed the map, there is that frontage. There's you have to go a few blocks to get to that waterway that goes under the two bridges. There is, in fact, work that's being done there to deal with just improving that area, and I think that part of the aim there is also to kind of future-proof it. But there's certainly a big investment in maintaining Manhattan, as you can imagine. A lot of money will be thrown at ensuring that Manhattan is not flooded or sinking into the sea. When is this funding round closing? I'm not sure about the Wealth Migrate timetable, Scott's timetable. There is continuous fundraising. It has to close in terms of the construction timetable. The construction, as I said, will start mid-year. The one reason why there is an element of urgency is we're not the only ones raising funds. The sponsors themselves are raising funds, and there was already limited capacity just in the last few days. So it is something to pursue.
I want to say that, Solon. At the end of the day, when you have these type of deals, I know last time we asked for a larger amount to invest, and
Yes, you did.
we got cut short, and a couple of our investors, one of them even sent money and wasn't able to participate. And so, for me, for Roche and anyone else that is interested, my strong recommendation is get involved. We're going to close it out. We're going to send the money over in tranches so that we make sure we secure the position. Because it's not very often that you get double-digit returns, particularly in the debt product in Manhattan, New York, in terms of that process. Clemens asked, I'm in Africa, is it possible I assume you mean for people in South Africa? So the answer is yes. So anyone that through the Wealth Migrate platform, certainly South Africans can participate, can participate in any one of the 3 deals. So you've got the debt, you've got the equity, you've got the blend, and then you also saw the London opportunity tonight. So, you can participate in any one of the 4 deals, basically, if one wanted to. Ramola said, can a company invest, or does it have to be in a personal investment? Both. So you can invest in an offshore company, an offshore trust, or you can invest in your own name in terms of that process. So we can help you with that in terms of that process. Okay. So what I wanted to do, Selwyn, is just while we're doing the Q&A, I wanted to chuck up a quick poll here. So let's just see what people are interested in. So let's go look at the Manhattan investment. And I'd like just for people to let me know, what do you think of the Manhattan investment? Do you want to invest in the opportunity? Are you interested in the debt and the equity or the blend? And then also, what level of investment would you like to make? And people can put in the different, the questions, and I'll keep answering them. So Ramona said, what is the cash on cash? On the equities, on the debt side, it's 10.35% in US dollars. So that's on the debt side. And on the blend side, I'll just go to it here quickly. I'll get my screen up. You're looking at 5.17. So in terms of that process. So that's what you're looking at, basically. Okay. Jenny J said...
Yeah, and I think Jenny's got a follow-up question.
Yeah. So Jenny J said, is the cash on cash number an annual amount? Yes, it is an annual amount. So all of the returns, the IRR is the total return. So it's the capital growth plus the income. And that's the total return per year. And the cash on cash is also the income per year, but it's paid every 6 months. So it's important to understand that. William says he wants to invest in all 3. So perfect, William. Fill in the survey if you want. I mean, you don't have to fill in the survey. It's just interesting for us to see what people are interested in. I think, William, you're already an investor on the Wealth Migrate platform. You can literally go online and invest directly in the deal. They're open, they're live. I'm very grateful to the team. You've got the opportunity to invest in all 3 right now. You've also got an opportunity to invest in the CarryFit deal. And, I talk a lot about diversification, but if you think about it, you've got a single deal here, but you've actually got 3 different types of assets because you've got debt, you've got equity, and you've got a blend. And so with different timeframes as well, which I think is also important in terms of this process. So I'm going to leave that up, that poll. And what I wanted to share with people, if you want to go along and you want to go and look at the equity, it would be the same, process. You would go in, you would literally go and read through it. You can see that is a 7-year investment, 7 years, 11 months. It's a total return of 22.5%. You can basically go through it. And once again, you can download the document, but this time it'll be the equity document. So there'll be components of it, obviously, that are the same, and you can literally go through it. But it'll be the financials and stuff that start to get different in terms of the return. So it just gives you an idea in terms of the breakdown, et cetera, et cetera. And then finally, you've got the blend, and you can go into the blend, and you've then got the blend, which is a total return of 17 and a cash on cash of 5.71% in terms of where we're at. Moresi, how do I invest? I am ready. So it's very simple. You just go to wealthmigrate.com and you are able to participate in the deal in terms of this process. And again, you can go and read all through it in terms of the process. So hopefully that helps, and just in terms of making it simple. If anyone's got any questions, we can go to it. So Marola said, do these investments have exits for investors? So it's an interesting one in terms of your question. So yes, there's always a time frame on when the investment is targeted to exit. It's never guaranteed, but targeted. But you can see this is a 7-year investment, which is on the blend. On the equity, it's a 7-year investment, but on the debt, it's a 4-year investment. So that's the target return for the exit. Yep, I'll share the recordings for everyone in terms of that process. So, any final closing comments for you? I've got the poll up for Manhattan. I'm going to leave it up for another sort of 30 seconds. I want to see if people participate. I'm just interested in what people, we won't hold you to it, but just interested in what people think. And then I'll put up the Carryfit poll as well, because I pivoted straight to you, so, and I forgot to put it up. So I'll put up the Carryfit poll as well. But yeah, I'm fascinated to, any kind of closing thoughts. We see it, we're definitely hearing you clearer now. So I just thought I would put it back to you.
Yeah, just to let you know, I've actually gone outside. So I'm actually sitting outside. So if you hear insect noises, dog noises, and so on, it's because I've actually walked outside to try and find better internet reception. So yes, Scott, I just want to emphasize the message that you send to your investors, which is one of diversification. I think the opportunities that you present today really do offer that. Very, very different kinds of businesses and very different kinds of investment outcomes that are being projected in different kinds of risks. But it is something, it is quite special to be able to show this range of things. And I think in both cases, you can judge by the quality of the sponsors and the actual products, how special the opportunities are. I really do believe that, but partly because I've been involved in choosing them. But yeah, I think it's a very interesting evening of investment opportunities.
Yeah, I mean, just to remind everyone, I mean, you can see it on the screen here, but I mean, you can literally go to Migrate, and you've got an opportunity now to invest in Manhattan and to invest in London. And I've been doing this personally for 28 years and helping people for 21 years, and I've never had the opportunity in one night where people can literally go and look at both London in a private equity opportunity, and obviously tonight we met Vern, the founder, and he explained what his vision was, and that was that every single person that ultimately has a baby is going to associate with Carryfit, which is it's certainly a hairy, audacious goal, which is fantastic. And then we've pivoted, gone across the ocean to New York, and we've looked at a real estate opportunity in Manhattan, and people have the ability to participate there. And again, with an extremely strong partner, where both of these projects have had due diligence with, you can see here with Callio Private Equity. So you can see the due diligence Callio Private Equity, and and then the different sponsors in terms of the overall process. So it really is quite interesting in terms of the opportunity that people have. And I've got the poll up for Carryfit, so I'd love to know what people's thoughts were on Carryfit, and just in terms of the investment at large. Ray said, "I'm totally keen. I need the info clear ASAP and to ready to sign." Thanks, Ray. Very simple. It's all live on the platform. You literally go to wealthmigrate.com, you log in, you go to the marketplace, and it's the top 4 deals live right now. You can go in and you can pick any one of them. I don't know. For now, I'm just going to pick the debt because it's there. You can go down here. You've literally got the documentation. You can open it up and you click on it, and everything that Selwyn was sharing tonight is yours to read in your own time. It's all as clear as you need it, basically, in terms of the process. Okay. Ramona said, "Can an investment terminate investment if part way the funds are needed to return to the investor? Presumably that T's and C's." Yeah, Ramona, that's a longer question in general. The simple answer is we like to say to people, we don't want people to do that. It's not an easy thing. It would be willing buyer, willing seller. It's got to be off platform. It's not an easy process. So we much prefer investors to look at it and say, right, this is the time frame here. This one is a 4-year, this one's 7-year, 5 years, and to focus on as an investment that you're looking in for 5 years. And Alistair, you asked what the term is for Carryfit. Well, that would be 5 years. You can see there the investment term. But again, just I had someone talking about this recently, and I can't remember, Selwyn, if it was you or Glenn that I was having this conversation with as well. Actually, maybe it was Garth at the Wealth Weekend. No, sorry, yeah. Garth at the Wealth Weekend. where he was just saying,
It's something we talk about a lot.
yeah, private equity at the end of the day, it's a target exit, but you still have to have a willing buyer, willing seller. It's not like selling an Apple share and it happens on an exact date. And it's just important for people to understand that is a nuance of private equity. It's more sticky, it's more difficult to sell necessarily, but equally that's why there's so much capital going into the alternative markets and primarily into private equity and debt, because it's not tied to the stock market. I don't know. Do you want to talk to that a little bit, Selwyn? Because I think that's a very important understanding for people.
Yes, I think that is important, Scott. And again, it goes back to your theme of diversification. And so these are not investments that have an equivalent on any stock exchange or any public market. So that's something just to be aware of. Carryfoot, early stage company investment. It's a direct investment into a business, and a value add property investment, unique property in Manhattan. Neither of those are things that are available to you in public markets. You get the benefit of the high returns. I mean, the projected returns, we think we're quite conservative in our modeling. I've spoken a lot in the property side about why I think the feasibility is sensible. You're getting a benefit of it being a unique opportunity, and it being you're getting a premium on the lack of liquidity in a way. So that's something you should be aware of as an investor. You're being rewarded for your patience. That's one of the things that I think investors should be aware of in the private markets. A particular feature of these two opportunities, though, is the exit opportunity at the total investment level. When Vern and Glenn and Scott were presenting about Carryfoot, one of the things that we did work on, they were talking about the potential exit and activity in the baby market. One of the things that attracted us to this investment is there is a lot of active corporate transacting in baby wear and in baby supplies. There are a lot of companies that are acquiring each other, and that people are trying to build up multiple product lines and so on. So that is an active area, and the most likely way that we would get our money out of this investment is Carryfoot itself being absorbed into a bigger company, being bought by another private equity house that specializes in products and so on. And then obviously in the property sector, there are multiple exits, family offices, other property portfolio builders, and so on, who would be interested in a property like the Catherine Street property. And so that is an active market. Once you have a stabilized income generating property, you potentially have a world of buyers. So both of these are, we think, the kinds of investments that would have exits.
And Selwyn also, it's the classic location.
Yes, location.
I mean, literally,
Yes.
I mean, look at it. I mean, anyone that's been to Manhattan, I've been many, many times to New York. I've invested all over America. I've never, until we met the Callio private equity team, had the opportunity to invest in Manhattan. It was just generally completely out of reach. All that you ended up doing was buying a residential flat in Manhattan, and you'd be lucky to get a 2 or 3% income in terms of that opportunity. So it just didn't make any financial sense. And now you can invest in this location, prime location, but you're going up the value chain, you're investing alongside the developer. And because of that, you're getting arguably less risk, but with better returns.
Yeah, so that's true. As I was saying, there's such an active market in New York City for properties. There are major property investors who do nothing but buy properties in Manhattan. And I've read up for example, there's the Wolfson family whose property portfolio is entirely Manhattan Island, and they're a billionaire property investor. So that's just something to be aware of on that asset. And as I said, for Carryfoot, it's quite a unique feature of that product market, that it is an extremely active corporate finance market with a lot of activity, a lot of eyes on it. So that's just an attractive feature of both of these opportunities, that there should be a market level access at some stage, a market level exit at some stage.
Okay, so as we wrap up, I'm going to put up the poll again. If you've already voted, you don't have to vote twice. But there's always those people that have been sitting on the fence. It's always if you do the Enneagram, it's the 5s and 6s that are still want more information. But I'm just putting that poll up. If you haven't participated and you're now interested in the Manhattan one, then I'll put up the Carryfoot one just now again. And yeah, I'd love to know if you're interested or if you've got any questions. Are there any final questions? I'm conscious of the time here. Selwyn, thank you very much for jumping online. And, it'll be interesting to see the feedback from people. And, we might have to do it again, Selwyn, as well, just in terms of, with regards to some of the connectivity, etc. But I really appreciate you guys tonight, both of you and your partner, Glenn, giving us the opportunity to London and everything that's happening in London and in New York. And as you say, it truly does show people, how one can get involved in diversification. So I'm going to give it another 30 seconds with regards to the Manhattan opportunity. For those of you who haven't voted, I've got the poll open now. And then once I close the poll, I'll go to London and then we'll look at it. The investment deadlines, Ramola, are as soon as possible. And why I say that is because we're closing tranches. So the Carryfoot, we will be looking to close within the next 4 weeks or so, 4 to 6 weeks at the absolute outpost. And then this tranche will close. And then equally on the Manhattan opportunity, the Manhattan one's even more difficult because, as Selwyn has said, there's multiple parties that are interested from around the world. And although you try and get an allocation, the way the developer works is they fill it up with a first come, first serve. And I know that the hard way. My partner Alex and I had a client in the first tranche who invested $50,000. He sent the money over. It was an international transfer, and they closed it. And he was a very unhappy camper when his $50,000 wasn't accepted. So yeah, don't. It's not a sales pitch. It's the way it works in terms of that process. Cool. So let me launch the final one for Carryfoot. For those that have been sitting on the fence or not sure, I probably should have had an option that said both. So maybe Alex just make a note for next time that I can have a both option so that people don't have to necessarily, but in terms of that process. But equally, the survey for us is just for interest sake. It's very simple. You go to the Carryfoot. You go to the wealthmigrate.com website, and then you can participate in terms of where you're at. So I want to finish just with a couple of final slides for you. And it literally just sums up what the next steps are. So give me 2 seconds. Where is it gone now? Where was my presentation gone? There it is. And so just to remind you of the next steps, the first one is to fill in the survey. So hopefully you filled in the survey. It's always useful for us to know what you want. The second one is to remind you that if you're investing less than $50,000 per tranche, then the best place to go is to Wealth Migrate. If you're investing more than $50,000, and I remind you that we've had many people invest, $250,000. We've had, a good few people invest over $1 million per transaction. If you're going there, then you go to privatewealthglobal.com. That's our private banking platform where you get a 50% discount on the fees. And then in terms of the timing, you've got for both of them, it's when the allocation is taking. So that sort of answers Ramola's question, but for everyone, the distributions for the London opportunity, which is the Carryfoot one, you're looking at your first distribution in March 2026. And as Glenn said, that's on the assumption that the company can afford it. And then the New York one, you've got your first distribution in June 2025 and your second one in Jan 2026. That's every 6 months. So it's sort of half yearly. And then the exit, the London exit will be around mid-2030. And the New York exit, the debt will be in 2029 and the equity will be in 2032. So I hope that I've got the timeframes and stuff right there, Selwyn, but this is just the rough indications for people to understand in terms of the overall what we're looking at. So,
yes, Scott, that is correct. March 2030 for the London exit is a projected target exit. I think it's quite reasonable. And then December 2029 is built into the debt. 2032 is certainly a feasible target for a property sale of this kind of property, yes. Thanks, Scott.
Awesome. And then I really just want to finish off with thank you. So thank you to everyone who's joined us live. Thank you to you, Selwyn, and Glenn. Thank you to Vern. I'm sure he's not here anymore, but thank you to him posthumously. I don't know, is that a word, or is that if someone's passed away? I'm not sure if I'm getting that wrong. But anyway, and yeah, hopefully if people are interested, go to the platform. You can go read all about it. You can see what the opportunities are. And I will finish off with one comment that, 10 years ago, I needed to, help people. They needed to have hundreds of thousands, if not millions of dollars to participate. And now you're getting access to world-class partners. You're getting access to world-class due diligence teams that are working with those partners, and you're getting the ability to invest alongside them. And so my strong recommendation, I'm not giving you financial advice, but I'm telling you that I'm investing in both of these deals because I just love the macroeconomics of the country. I love the location of where they are. I love the business and what they're actually doing. The one's a property, the one's a business. And both of them, I really like the partners in terms of that process. So thank you very much, Selwyn. I deeply appreciate it. And we will see you on the next webinar masterclass.
Thank you, Scott. Thanks, everyone.
Good night, everyone. Cheers.